Adaptability and flexibility are crucial traits for traders, as financial markets are dynamic and ever-changing. Here's why these traits matter and how traders can cultivate them. Adaptability in trading market conditions. Markets can switch from bullish to bearish or become range-bound. Adaptable traders adjust their strategies to align with these new conditions. Global events like economic reports, geopolitical tensions, and policy changes can impact markets. Being adaptable means staying informed and adjusting your approach accordingly. Strategies and techniques. Successful traders don't rely on a single strategy. They have a toolkit of different techniques and know when to apply each one. Markets evolve, and so should your strategies. Regularly reviewing and tweaking your trading plan based on performance and new insights is key. Technology and tools. Adaptable traders utilize new technologies and tools to improve their trading. This includes technical analysis software, algorithmic trading, and staying current with trading platforms. Keeping up with the latest advancements in trading tools and market analysis techniques ensures you're not left behind. Flexibility in trading. Open-mindedness. Flexibility involves being open to changing your opinions and strategies based on new information. Stubbornly sticking to a failing strategy can be costly. Engaging with other traders and learning from their experiences and strategies can provide new perspectives and enhance your approach. Risk management. Flexibility in risk management means adjusting your risk levels based on current market conditions. In volatile markets, it might be prudent to reduce risk, while in stable conditions, you might take on more. Being flexible with position sizes based on the confidence level of each trade can optimize your risk-reward ratio. Emotional adaptability. Flexibility involves managing your emotional responses to market movements. Staying calm and composed, regardless of market volatility, helps in making rational decisions. Flexibility is also about recovering from losses and not letting them affect your future trades. Viewing losses as learning experiences rather than setbacks is crucial. Developing adaptability and flexibility. Education and research. The more you know about the markets, the more adaptable and flexible you can be. Read books, take courses, and stay updated with market news and trends. Testing your strategies on historical data helps in understanding their effectiveness across different market conditions and teaches you how to adapt them. Practice and experience. Use demo accounts to practice new strategies and techniques without risking real money. This helps in building adaptability. Experience in live trading helps in understanding how to make real-time adjustments to your strategies. Mindset and attitude. Developing a resilient mindset helps in staying adaptable and flexible. Accepting that losses and changes are part of trading helps in maintaining a positive outlook. Be open to constructive feedback and willing to make necessary adjustments. This can come from mentors, peers, or self-reflection. By fostering adaptability and flexibility, traders can navigate the ever-changing markets more effectively and improve their chances of long-term success. These traits enable you to react promptly to new information, adjust your strategies, and stay ahead in the trading game.